What's going on, y'all? Welcome to King Boulevard and Wall Street. I'm your host, If Archer, back for another calibration session. If you're in our elevator program, you already know how it's going down. If not, we're about to check a couple charts, push a couple buttons, and see if we can't help you figure out what's going up. So let's get started with the CBOE Market Volatility Index, better known as VIX or Michael VIX if you're in the community, depending on how we feeling, you know what I'm talking about. But we've been in a caution zone for a few weeks now after VIX broke below our hedge line at 15. We're looking for a bounce somewhere around our risk off line at 12. But no matter what the case is, let's say you've been rocking with us the whole time. So let's pay attention to the green line back up around 22. We were over that line in March when we got our last buy signal from VIX, and we actually took advantage of the markdown sale. And if you think about it, if we bought anywhere close to VIX 30 or over VIX 25, those positions should be doing pretty well and have been doing pretty well over the last 3 to 4 months. So it should be time to start trimming. For those of us who've been surfing the bullish momentum, be extremely mindful of that risk off level because it's rapidly approaching in our VIX workup. That's all I'm gonna say. So 1273 is the current low. We reached that low last week, and our VIX risk off line is right there at 12. Just keep that in mind as we go through the analysis as we continue on. All right, so let's move on to SPY. We closed the short week with an inside candle on below average volume. Now, of course, above all moving averages, the trend is still bullish. So let's look at it like the bulls. That inside candle could be the price consolidating to allow the EMAs to kind of catch up and set up a support level higher. Still bullish, we could also see the price dip below that last breakup candle low. So my weekly chart elevators, depending on which KBWS strategy you rock with, anything above your Tecmo Bull Superline is where we would normally consider trimming profits to free up capital for a potential buying opportunity lower. Now, we'll talk more about those potential lower buying levels as we kind of break down throughout the week and look at the daily chart. But if you're going to stay on the weekly time frame and you're not really interested in anything like a micro movement, then just keep your eye on the EMAs. Just remember, we are Tecmo super bullish above 420, and we're still on our bullshit all the way down to like 400. The cues look pretty similar to what we just discussed with SPY. I mean, just plug in the EMA and price levels, and you should pretty much be able to press play on that same setup. That brings us to the Russell 2000 IWM, which is our small cap index. Since early May, we've been watching the price action on this one a little closer than in previous mid to long-term analyses. I'm going to read the Sunday commentary from May 7th, which is 8 candles back, so y'all can have some context on where we are right now. So here's where the picture starts to get a bit more long-term focused. This chart is suggesting any short-term bullish action we see across the markets is likely to stall out somewhere between the resistance retest zones of the two bearish crossovers seen here. So as you can see, we began running out of steam about 2 weeks ago in the quiet witching week, leaving a nice wick and closing inside the purple tape bearish crossover zone. That momentum kind of carried us into last week with some hawkish Fed talk as the supposed catalyst for the selling. All to close the week resting on the recent bullish non-EMA crossover off the price action momentum created since our May 7th commentary. With the rest of the market posed for what looks like a potential volatility spike or a period of consolidation before it decides which way it wants to go next, now may not be the best time to start a position with IWM. That said, the KBWS weekly strategy suggests we have a buy zone between here and about 176-ish. So we'll be keeping an eye on that. I think we also have a gap down there we'll be discussing in the community on some of the more technical charts on the lower time frames, starting with the daily.